Hello, everyone. This is Doug Campbell-John, and welcome to the latest episode of Revenue Renegades. This week, we've got Kyle Norton, the Chief Revenue Officer from Owner.com, amongst many other things. Kyle's an active angel investor. He opened up the Pavilion chapter in Toronto, is soon to be a Bay Area local. I'm very excited about that. So welcome to the show, Kyle.
Yeah, thanks for having me.
So tell me a little bit about Owner.com and what drew you to the company.
You can think about Owner as basically Shopify plus HubSpot for the little tiny takeout restaurants that you order from on a Friday night. So we'll do their website, online ordering, email, text message marketing, custom branded app, all in one solution. And the core differentiation is a trade-off for the restaurant owner because we give them less choice and flexibility in our platform, much less than our direct competitors, in exchange for way better results. Because by opting into a set of best practices and templates, they get an army of experts that are working on their behalf, constantly running A/B tests and experiments in patches of customers. And then we roll out sort of the winning ideas across all of our customers. And so rather than a restaurant owner trying to figure out how to be a digital marketing expert and stitch all of these tools together and have sort of varying levels of success, they opt into a system that works out of the box. And typically customers will come from our direct competitors and make 50% more in their first 6 months, double, triple. There's like a awesome story that we just put on the website. Somebody was doing like $1,000 to $2,000 a month in direct online orders, and he just said that he's now doing $20,000 a month.
Wow!
So there's a lot of these cool stories, and it's a blast serving SMBs. It's something I'm passionate about, so it's been fun.
That's great. Tell me a little bit about what the kind of sales environment was when you came there, and what are some of the big changes you've made?
So I started early. Like we were 2.5 million ARR. I jokingly say before that, I said I would never go back to this early stage of a company. But through GTM Fund, met the founder, Adam, and just, there was the gravitational force that I couldn't resist. Having invested and advised and being involved in a bunch of startups, you develop a bit of pattern recognition with founders, that founder radar. And I knew there was some magic here between Adam and Dean, big market. And so I took the plunge, and now we're well over 30 million. The team was 5 when I started. It's 100 plus now across sales, partnerships, customer onboarding. I own growth and demand gen, RevOps enablement. So it's like a full go-to-market stack now compared to it was a manager and a couple reps when I started. And yeah, we're on a pretty good clip. Like we're going to grow more than 2x again this year. The economics get better on a monthly basis. The intention was always that we were going big with this one. We were playing for a big outcome. We're playing to win the market. So we were able to make some investments in infrastructure earlier than you typically would for a company of those stages, knowing that it would pay off now, and certainly it's paying off.
So talk a little bit about what those investments are and what's kind of worked really well and maybe some things that haven't worked as well.
The two biggest investments were RevOps and enablement. So we invested in both the infrastructure and systems and the people to give ourselves a growth platform. And so it's really hard to justify like fairly big salaries in supporting functions, like functions that don't carry a quota, because in your growth model, your growth is an output of the number of AEs times their quota, right? which is like an incorrect narrative. But having now done this a few times and sort of seeing the impact, we invested very early in really great go-to-market data, really great systems, really great new hire onboarding, training, and development. And so those things, paid off early, but the investment compared to making 6 reps more productive, it's arguable. Like that ROI is still pretty thin. But now that same system, and given how mature those systems are across 22 account executives, it's night and day. Because if you look by comparison, each rep on our team is probably 3 to 4 times more productive than most of our direct competitors. And so those were investments we were keen to make. And I think the lesson that I share that I've been careful to couch now around it is you have to know what game you're playing. Because oftentimes people hear me talk and they go, I got to build a big RevOps team and invest all this infrastructure. Yes, if you're going big, because that same strategy might not work if you're going to have a much smaller footprint and you're trying to get profitable early. You're trying to play for an acquisition outcome where your economics might be more important. But for us, like, we are trying to win a market. It's a massive market. It's restaurants. We're the biggest SMB market in the country. So I couch this advice with, like, know the game you're playing. Are you boot scaling? Are you trying to go one and done, like raise one round and be done and try to get to profitability? Some of like our strategy of win a big market might not be super applicable.
Could you name what some of those tools are in the stack?
We ripped out Outreach early in favor of SalesLoft. It's my preferred tool. So that's the sales engagement tool we're using. We built a bunch of in-house stuff to enrich and score leads. And now we use a company called Data Lane for most of our prospecting data. We use Momentum for like AI CRM enrichment. So after a demo call runs, Momentum reads the transcript, fills in the CRM fields for the rep, can trigger alerts to the manager or to the rep if they've missed something in the sales process. There's a bunch of stuff and a bunch of intelligence that's built off Momentum. And then one of my recent most favorite tools is Avara, which is like an AI sales simulator. And I looked at a bunch of sims, a bunch of platforms. You've got the Hyperbounds of the world out there. And the reason we chose Avara was how closely it can resemble our exact selling environment and my exact selling approach. And so it's very highly tuned to making sims that are very specific to how I teach sales and how our specific sales environment looks. And the results have been really exciting. Like they're a young company. We've only been using them in full production for maybe 6 months, but you can already tell the reps who do the most sim time improve the fastest. They have the best ramp. We're able to now spin up new sims. So that's a really exciting one. And then we're now just in the process of building out with OneMind, who I know you know Amanda. Mm-hmm. So we're very excited about, the results we saw with the HubSpot Superhuman that they launched, and the ability for that to offer a different engagement channel than a traditional, hey, fill out a form, talk to an SDR, book a meeting, like a new, through their AI avatars, their AI superhumans, a way for a restaurant owner to land on our page and have a much more education-centric experience. So we're just in the process of building, but I'm bullish on that one as well.
Wow. So it sounds like you're definitely on the bleeding edge on some things and exploring some very cool new technologies.
Yeah, trying to be. I mean, it's been an advantage for me throughout my career. I was one of the first 10 or 15 SalesLoft Cadence customers. Kyle Porter onboarded me himself way back in the day. We were one of the first Chorus customers. Alina just told me that we were one of their first 3 paying Chili Piper customers back in 2015 or 16, whenever that was. So I've long been able to carve an advantage by being early. I think the reason we've been successful there is oftentimes I look at picking these tools in emerging categories, much the same way as I think about writing an angel check or doing diligence for an investment in GTM fund. You really are betting on the founders more than you're really betting on a product, because products may have some differentiation in the early days, but it's really the quality of the founder, the speed of shipping, the alignment of vision that really matters. And we've been fortunate, I won't say lucky, but fortunate to pick some good ones and be really early. Pavlov is another one. I think we were their first full paying customer. And, it's a platform that helps you build post-sales journeys with incentives and triggers. And so we implemented Pavlov and immediately accelerated our time to launch or launch percentage, but I'm making that decision because I'm like deeply vetting the founders. I'm making a decision of whether or not I think this person can really win a category, because I think where people go wrong is, they pick a shiny product. It's a seed or Series A company, and then quickly, like their competitor overtakes them, who may not have been the first mover. And so, like, really thinking about that decision through like a venture investment lens has been helpful.
Tell me a little bit about you're clearly a student of the craft of sales, right? You obviously, from your work experience, from your angel investments, you have your own revenue leadership podcast on Pavilion, the founder of the Toronto chapter in Pavilion. What are some of your guiding principles in terms of how do you think about running a successful sales team?
So there's a lot there. I think you can roughly bucket things into, like, call it 4 major pillars. Like, number 1 is talent. Can you get really good at attracting great talent, scorecarding and selecting the right individuals, and then creating an environment where these people can develop and flourish? And so that's the enablement investments. That's like an environment of coaching that I'm constantly talking about. So there's a talent pillar. There is an infrastructure pillar. And thinking about like rep-centric design, so building infrastructure that is primarily there to accelerate the rep. I think where people go wrong here is they build a bunch of stuff by just like adding more required fields, adding more validation flows in Salesforce, and you get good data that way. You get more as the business leader, but it like really slows down your rep. And so having a very rep-centric approach to RevOps, and that's why my head of RevOps, Steve Dinner, why I think he's so great at it, and we've been together almost 9 years now, because it's like always thought from the rep's perspective first. Mm-hmm. And then the next pillar is like positioning, I would say. Can you get really sharp about how you're positioning your product in the market? And so I've got this like point of view positioning framework and this radically transparent selling methodology that I teach my teams. And so this positioning pillar is intertwined with sort of the last thing, which is strategy, and being able to make good holistic business decisions. I think like one of my biggest differentiator as a sales leader is I have the ability to think beyond the sales number. This is the thing that I get the most feedback on, and people, like the board will remark on, is they're commonly frustrated with sales leaders who only think about the sales number and then like nothing else. It's a black box after then. And so I think building a go-to-market strategy that, starts at awareness and your mindset stretches all the way through to renewal, and making good decisions about the expectations you set and how you position the product and what the handoff looks like and what the ICP is. And I think there's a bunch of decisions in that category that folks struggle with a lot. And so that's like the rough framework that I would say is how I'm building.
Let's double click on that last one. So to your point, a lot of sales leaders just focus on the number. Did I meet or beat the number? Mm-hmm. When you are sharing metrics with your leadership team, your CEO or with the board, what kind of things, specifically are you trying to deliver and make sure that they're aware of in that process beyond the number? And when you are talking to your RevOps team, what are some of the questions that you're going to them for?
So ultimately, if you zoom way out, it's enterprise value. Like that's the thing that I need to be focused on generating for the company. And it seems really obvious, and yet it's not obvious in practice, I would argue. And so then from enterprise value, we're thinking about LTV CAC. Like there's the growth number for sure, but then underneath the growth number is the unit economics. And so LTV it's harder for sales leaders to spend time and attention on because it's such a lagging metric, and we are by nature people who like to hunt what's right in front of us. And so understanding and really prioritizing what happens after this deal gets closed. Are these customers activating with high velocity at a high rate? Are they adopting lots of the platform? That can be about the expectations or the ICP. And really just thinking about the entire revenue journey, the entire customer journey. You said you've had Yako on. That bow tie is a great methodology for it. And I spend a lot of time thinking about and looking at the business post sales, and then pulling as much as I can into the sales journey. And so more tactically, like in our MBRs, there's big sections on customer onboarding success, customer onboarding metrics, and then customer success and support. And the feedback loop is pretty tight. So the customer onboarding team has a monthly sync with the sales leaders where they're going into, deep details of the quality of the close one cohorts and where they're finding trouble areas and opportunities for improvement. And then we're bringing that into wherever it needs to be in the sales journey. Is this, a question we need to be asking in discovery? Is this a new expectation we need to set? Is this, a customer that passed our scoring methodology but is suboptimal for some reason? And then should we be tweaking our qualification criteria and then bringing that all the way to the top of our scoring methodology, which would dictate even what leads go in top of funnel. And so I think just thinking about the entire journey holistically and spending time inspecting the business post sales is one of the most critical things you can do that people oftentimes miss. And I like an MBR or QBR format to do that with a lot of granularity, but there's other ways to cut that.
Do you tie comp plans to any kind of post sales success?
Yeah. So we sell SMB, very high velocity. So it's a sub 7-day sales cycle. And the onboarding journey could be anywhere from 4 days to 2 weeks to maybe even 3 weeks. And so my reps are paid on customer launch. So they don't get paid to close the deal. They get paid when their customer goes live. And so that very tightly ties their incentive to the customer being high quality, having the right expectations, having a good handoff. We could do it because it's high velocity. If we were mid-market or enterprise, I don't know if I could totally get away with that. But I would certainly in those environments, if I was back in that environment, think about ways to tie customer quality to comp in a material way. But yeah, that's how we've addressed it, and it made a big impact. We made this change last July. And fairly quickly, you saw the account executive team spend a lot more time and energy on the handoff and helping their launch teammates post close one, make sure things are on the rails. And we've got this like back to sales motion where if a launch rep is stuck or there's like a gnarly problem in the launch journey, the account executive will come back in. They've got that high trust relationship, and so there's a bunch in there. Yeah,
I love that. How do you kind of check in with your team on a regular basis? Kind of what's the cadence of your pipeline reviews? How do you run them?
So because we're high velocity, I don't do any pipeline reviews. As sort of controversial as that may sound, I don't need a roll-up forecast. I don't need from the manager their expectation of what they're going to close, because I can basically just look at the input metrics in Salesforce plus Sigma, our BI tool, and call with probably more accuracy where we're going to land than a roll-up. I was answering this question yesterday in a board meeting, but like I can basically tell you where we're going to land within 5 to 10% before the month is even started.
Wow.
Usually like 5%, because you just look at top of funnel.
Yep.
What's the lead volume? What are our rolling conversion rates from qualified lead to opportunity? What are our win rates? Like those things don't fluctuate too wildly. And by mid-month, if we're on track or off track, then we start to make other decisions. If we're lagging behind because demand gen is struggling, okay, we have a set of arrows in our quiver to say, okay, we're going to do a big referral push, or we're going to go do we're going to run an incentive on close loss for the BDRs. We have enough levers that we can pull that even if I'm off on my on my start of month prediction, we can actually just change our fate mid-month to make sure that we get to that right place. And honestly, like, most of the credit there goes to the team because they're incentivized obviously on their individual targets, but we've built enough of a culture around the team number. We often say, like, we have this can't miss culture. We have a culture like where we will not miss the number no matter what. And so when we're behind and the, head of our AE team and the head of the BDR team, when they're rallying their troops, like, people respond really well, and we get into ultra grind mode and we'll get the job done. So there's some science there, and also some just like old school sales craft and effort.
What are if you're in that situation where you're finding yourself behind the number, what kind of plays have you run, or how do you think about going about making up that gap?
So there's a bunch you can do. There's incentives and spiffs. So, like, do you want to incentivize and just like take a higher CAC to get people excited to put in a higher effort? And so, like, we're running this March Madness spiff right now to ensure that we have our best month ever and really crush the record. Then there's other places you'll pull, like limited time offers, LTOs, for the customer. So we know that offering certain incentives end of month will give us a win rate bump. And, it costs you more money, so you don't want to do it unless you have to do it. But our job is to deliver the number no matter what. And so in that last 10 days or 2 weeks, we'll take some limited time offers off the shelf. We can also play with lead distribution. So if there's a ton of inbound leads and maybe the inbound reps, there's like a sensitivity. So there's an AQL number. We call them AQLs, automatically qualified leads, but there's an AQL to SDR number that we know is optimal for maximum conversion rate. And typically, if we're a little bit above that, if there's too many AQLs, like, we won't change anything too drastically. But then at some point you'll say, hey, like, we actually need more juice here. So we'll start to send recent AQLs that haven't been contacted to the BDR team. So now, again, you're incurring a higher cost because you're paying an outbound commission on an inbound lead where you've already incurred a marketing cost. But again, if you have to hit the numbers, so you're going to go pull those levers. And then the other big one is just, like, honestly, managers getting on the front lines. And so if that always happens in LWAM, even the second line leaders, they're hopping into demos, they're hopping into callbacks, they're like really in with the reps to try to move the needle. And so that's an LWAM tradition. And I think it's like just an important cultural touchstone that the reps know that their managers and their leaders are there with them. And so if I'm really needing it and, the top of funnel volume is a little thinner, then we could even start that in the third week of the month to try to give us extra juice. And you largely concentrate that on your newest and ramping reps,
right,
who have the lowest win rates. So, or if there's a rep that's just like in a funk and struggling and their confidence is a little down, you can point your managers at those, and that will immediately give you a win rate lift for those teams. And so those are a few things that we'll do end of month.
Those are great tactics. Thank you. As an investor, I presume you've seen a lot of startups struggle with early go-to-market challenges. What kind of advice do you give them?
It really depends on the situation. I think one of the first pieces of advice is what I mentioned at the top of the pod, like, know what game you're playing and be cognizant that you're actually playing that game. Like, are you playing a traditional venture-backed high growth type of approach? Or are you in a smaller niche market where you want to build a $10 to $15 million ARR company and look for an exit? Are you in hopefully you're in an industry that has a lot of buyers. Are you trying to bootstrap this thing? So number one, know the game you're playing, because I think one mistake that founders make with early go-to-market is any best practice sounds good, and they apply sort of like a smorgasbord
Yeah.
And it becomes like a cacophony of stuff that's happening. So number one is like, know what game you're playing. One of the other like most frequent pieces of advice is get really good, like get really narrow and specific about your ICP, because you're so desperate for those early deals that like anybody who can fog a mirror, you're willing to sign up as a customer, because you don't have the opportunity to be choiceful. And it takes a lot of discipline to be choiceful when you're like scraping and clawing and trying to get enough revenue to raise your next round. But those are short-term mistakes that will be really painful in the medium term, because those customers are going to churn, and then everybody's going to look at your business and go, I can't invest in this like mid-market business with like 80% annual churn. Like that's crazy. And then you're going like, oh dang, what I knew that customer would be successful. Yeah. So be really specific about your ICP. Positioning is another place that I think people get wrong all the time. And it's just like generic. Hey, we're the best X. It's like, yeah, you think you're the best X, but like you're not, like at a seed, as a seed stage startup, like there's no way you're the best product in this category unless it's a completely new category. And we're all very biased. We think our thing is awesome, but can you get really honest about where you're good and where you're not good, and be transparent with your customer about that? Because what you want to do is find early customers that have high philosophical alignment. And this is why I teach this point of view positioning philosophy, because I'll use Owner as an example because I led with it. Our point of view is restaurant owners shouldn't try to be awesome digital marketers. They're not going to be very good at it. And instead, the right approach for them is to sacrifice choice and flexibility in exchange for enlisting an army of experts that will just make them more money. Mm-hmm. And so we lead every single demo conversation with that. And then the customer can opt in to say, actually, no, I just got these custom fonts made. And like, I think that the brand voice and the design of my website is just as important as my food. Awesome. I totally respect that way of viewing the world. You're not a good customer for us then. Right. And we'll recommend the right people. Go use BentoBox. You can do all of this stuff. You can do make it look however you want. You're gonna have to pay $5,000 out of pocket for a designer, and you got to maintain this thing. And you're probably going to miss all of the best practices for search engine optimization and conversion rate optimization. But like, if you are a brand maven, then like go do that.
Right.
And so how can you get super honest with your honest with yourself first, and then honest with the customer? Because the wrong customers are going to opt out really early. So you're not wasting your time with them, and you're not closing customers who are actually don't have the same worldview, who will ultimately churn and just like not and be wastes of time. And then it is massively trust building if you can lead with your strengths and weaknesses, and let people opt in quickly. So I think this is one of the other biggest areas of opportunity for early stage founders. Like, get really clear. And the barometer here that I really like is from our VP of marketing, David Flaherty. He's like, if your competitors could reasonably assume the same positioning as you, your positioning is no good. Like that's the litmus test.
Right.
And the other framework here is Mike Maple's framework from Pattern Breakers, which I recommend everybody read. You want to force your customer to make a choice and not make a comparison. And you're forcing them to say, either you're going to do business like this, or you're going to do business like this. Either you're going to learn to be a digital marketer and build all these tools yourself and design it in a really specific way, or you're going to partner with an expert and let them do it for you. That's like the owner choice that we ask people to make, versus saying, hey, I'm better than Pop Menu because our SEO is better.
Right.
Well, like, they can say their SEO is better too. It's not, but they can say it, and it's hard for a restaurant owner to like untangle who's telling the truth. And then ultimately they just get paralyzed by indecision and overwhelmed that nothing happens. They just stay with the status quo. So choice versus comparison is the other framework, and I find that like very few companies do that in the early days, because there's nobody believes that you're the best product.
Right.
So those are some of the big ones.
I love the niching down piece, in the ICP, and I also that notion of just being really candid. I mean, to be honest, I was use the analogy of going to a great restaurant, and my favorite sommelier or waiter is the one who is actually not just saying, pointing to the most expensive thing on the menu or the expensive bottle. They're actually saying, I'd stay away from this, or this is really what I recommend, which is not kind of the obvious choice, right?
Yeah.
So that's the same kind of thing. I think when I build, and I've had these relationships with the reps over years, even if I haven't bought their products, just because they had that kind of transparency and honesty up front. Like, hey, listen, I hear what you're looking for. We're not the best solution for that. Let me point you in another direction. And then that trust is immediately cemented.
Yeah. It's the Todd Capone 4.5 stars thing. It's like people are suspicious of the 5-star product.
Yeah.
4.5 stars. Okay. There's some people that don't like it.
Yeah.
And it's just a better way to operate as a business. Like it's sort of also a values thing for me. I want to sell in this style. I want to teach my teams to sell in this style. I think in the long term, you will create more enterprise value doing business in this way, because this is another common piece of feedback I give to founders is I know you're just scrounging by and you're surviving hand to mouth, month to month, trying to scrape in revenue, but having a longer term time horizon is difficult but really important.
Yeah.
So setting the right expectation, and we're all going to oversell a little bit in the short term. That is okay, but if you can sell vision over fabrication, I would advocate for that. And because you will build much higher trust relationships, those customers will be happier. The ultimate flywheel, and this is a big Jason Lemkin thing, the ultimate flywheel is super happy customers.
Right.
And you don't get that benefit at 1 or 3 or even maybe at $5 million ARR, but certainly at $10 million ARR, if you have picked high good ICP customers, and you've been honest about the strengths and weaknesses, and you've given them a great onboarding experience, if you've invested the dollars in the post-sales side, which people oftentimes don't do, if you can make those slightly longer term decisions, the compounding effect that you start to see at between 5 and 10 million ARR, where you're just the product that people actually like,
right, is
impossible to put a dollar value on. And Owner, for example, is the highest rated product in all of restaurant software. So if you go to G2 Crowd, higher than any of our competitors, any of the point of sale providers, any software product in restaurant, we are the number 1 highest rated, because we've tried to play this game. And we do month-to-month contracts. Not good for churn. It makes it way easier to churn, but it's the right set of values for us, because if the product doesn't work for somebody, they don't hold a grudge against us forever. Right. If you go onto Pop Menu's Better Business Bureau page, people are just roasting them for not delivering and then locking them into contracts. And sometimes the product's just not going to work for somebody. Right. Oftentimes it's because the customer made some mistakes. They didn't give you the assets you needed or access to the right stuff, or they did something weird. They're set up another domain to test some other thing that's completely cratered their SEO. There are reasons why the thing is just not going to work. And then if you then lock somebody into a 12-month contract and you're sending the collections agency after them, yeah, good luck. There's a reason why you're poorly rated on these platforms. And so again, it's you have to have a long-term view, and we could have addressed churn more easily by just locking people into annual contracts. But you're spackling over the issue, which is go deliver more customer value, and you'll have less churn. And so now we've been forced to do that, and now our churn is starting to become our retention rates are starting to become really great, even though we're only on a month-to-month contract with people, because we're delivering so much customer value. The compounding effect, and there's a reason why we are actually growing faster today than we were 6 months ago, and why our gap to our competitors is bigger today than it's ever been, is because we've taken, in so many of these circumstances, a longer term time horizon early investments in enablement and RevOps, this month-to-month contracts thing, investing in organic and brand. Like we have more followers on Instagram than Toast does. Toast is a like $15 billion market cap or whatever. And we're like a, tiny company of 200 people. But the returns of organic marketing are really starting. We've been at it for like multiple years. And we've had this massive investment that made no real sense at the time. Like in that fiscal year clearly was not good ROI, but now it is compounded and these returns. And so I think like that is probably one of the big meta points to make is like it's hard to do, but making the long-term bets is, and I think some of this is colored by my experience at Shopify, where Toby would say like, we're building a 100-year company. And so make 100-year company decisions, which I've always loved.
I love that line. I love that line. So let's shift to AI for a second. What's exciting you the most about AI, and how do you think it's going to affect your work and your team's work?
Everything is exciting for me. I spend a lot of time on AI Twitter, and I use it constantly. Like for my podcast, my prep, I've got a clay table that Jordan Crawford helped me make where I can like drop in the LinkedIn URL of a guest and a few topics that I think are interesting based on what I know about them. And it'll do these like massive research tasks and pull in every piece of content they've ever written or every podcast appearance and synthesize them, and then help like draft a bunch of questions I can select. So I have a bunch of these personal workflows. I've got a ChatGPT project for all my health stuff. And then like I'm moving to here. So there's like I've got a whole immigration thing of like all of these questions and helping me draft stuff. So I'm using it everywhere personally. And then in the business, like Momentum for AI CRM enrichment and a whole bunch of other stuff, Avara for AI SIMs. Pavlov has some really interesting triggers, like now standing up OneMind, which is probably one of our most bold AI bets with their sort of superhuman avatar, like SDR. And we've built some of our own stuff with machine learning, scoring models, and what have you. So it's changed everything. I think my thesis has largely been about focusing on AI tools internally first. Like, how do I use AI to make my teams more effective and automate more of their day-to-day to let them do more selling? So rather than using AI to replace selling, I'm trying to use AI to help my humans do more selling. And that seems to be backwards from a lot of folks. Everybody, it's like AI SDR, just carpet bomb your market with like sort of crappy AI messaging that I immediately marks. I use Superhuman for email. I immediately mark you as spam if I feel like you've like just AI written an email with no effort to know who I am. And I won't ever, that person will never make it back into my inbox because Superhuman does a good job keeping them out. And I think a lot of people are the same way. Yeah. So it's all about augmenting the reps and enhancing them, because I also believe that AI, the returns of AI, especially over the next like 1 to 3 years, are really going to favor people with great internal data. Like it's garbage in, garbage out. That's nothing novel. And so for me, it's like, how do I use all of these tools to consistently build an incredible database of information that then we can go do interesting things on top of? And now that's starting to exist. Like even Guru we use for our knowledge base, and you can spin up new Guru cards with sort of their AI draft solution from, like a support call where somebody's handled an issue where that's not well documented. It can use the transcript to draft something, or take a Slack thread, or if there's questions asked in certain Slack threads, the Guru bot will try to synthesize that question and show the Guru card that aligns to the answer. Like all of these things are about like generating more high quality data and then surfacing it to people so that they are doing higher value work, talking to customers. That's the highest value thing that you could possibly do. And so that's my general thesis on it.
I'm going to offline ask you for your clay table.
Yeah, sure.
I love that. So just wrapping up, I have a few just kind of questions, kind of keeping on the AI theme. If you could automate a task forever using AI, and this could be personal or in your work life, what would it be?
Oh man, taxes. Like, I hate doing like taxes and finance stuff and like all this accounting stuff. It's that is a super drag, and I think that AI could do a great job. Day to day, I like what I'm excited for Superhuman to do is like give me better AI drafts. You can do it now, and for low value situations, I'll use their AI like reply draft. But again, it's like a little too wordy and it's like pretty good.
Right.
So if I'm just like politely declining something, I'll use like an AI draft, or if it's like something like low stakes. And I'm confident, like they're working on a bunch of stuff. So I'm confident that like I can get way more productive in email if a product just like learn about all my email habits and like, I can drop into an inbox and have everything pre-populated. And I'm just sort of like approving or augmenting things in that sort of a dashboard view. Yeah, email. I don't like doing email.
Yeah, I think that's a great one. And especially to your point of learning your voice, learning your style, and doing it in that way. Because I think so much stuff we've gotten as humans so good at pattern recognition around something that is just generically created.
Bot breath is what I call it.
Yeah, bot breath.
Bot breath. Yeah, if you read an email that's clearly written by AI, that AI's got bot breath.
I love that phrase. All right, bot breath. That's it. That's going to be. I'm going to use that in context. Thank you. What's something you're passionate about that might surprise people?
If you've ever listened to me, it won't be a surprise. I'm like very, very passionate about like personal development, health, and mental wellness, mental and physical health. Those are things that I spend a lot of time on. What would surprise people? I almost went to fine art school. That's always a surprise. My dad like very gently talked me out of that, and it's like, hey, like because I got into the best business school in Canada, and he's like, you could always like keep a sketchbook and do art on the side, but like like, it's hard to do business on the side. I was like, yeah, good point.
Thanks, Dad.
Yeah, thanks, Dad. So, but I was like all I spent my time on was sculpture and pottery and up until high school, and then there was no opportunity to continue doing it in university. They would not let me use the studio. Unfortunately, I'm still bitter about it. That oftentimes surprises people. This was in another surprise. This was in the days where I had like shoulder length hair, earrings. I basically wore a toque 4 seasons of the year. Was very much a Vancouver lad growing up.
You're going to have to send me a photo of that. We'll just splice it into the podcast.
Yeah, I'm not going to be doing that.
All right. What's one thing you can't live without in your daily routine?
Probably exercise. I think I'm on day 820 something in a row of like working out every day. I've been an athlete most of my life, and then COVID happened. Gyms were locked down. I had my first kid 2 weeks after that, and ended up being in the worst shape of my life, and just like so not the person I was used to being. Like not as sharp in the morning. Like getting out of bed was always like, ugh. I was sluggish, and so getting back into sort of that athletic routine after sort of like a weird year there. Now I like can't be without it, and that and like honestly my AirPods. Like I listen to a lot of podcasts and audiobooks. One of the reasons I started my podcast is I was just like not satisfied with what was out there in revenue leadership land. And I had listened to over 50,000 minutes of podcasts in 2023, says my Spotify Wrapped. So it's less now because I'm like more on audiobooks these days. But yeah, that's the other thing I can't live without, my AirPods. I don't know, like going back to like a wired connection, it would be like devastating for me.
Sliding backwards.
Yeah.
And finally, how can listeners keep in touch with you and kind of help you on your journey?
Hit me up on LinkedIn. All my content ends up there, even from the Substack and the podcast. I'm always posting it on LinkedIn. And so, yeah, if you're an early stage founder and you want to talk revenue strategy, happy to talk about that stuff. Or if you're a rep if you're a SMB, high velocity rep, and you're looking for jobs, I'm hiring tons. We'll probably hire like 50 people in sales this year, something like that. So, yeah.
All right. check out Kyle at owner.com. Kyle, I feel like we could talk for another hour. I'm excited to welcome you to the Bay Area. So when you get out here with your family, please let me know, and we'll catch up in person. And thank you so much for taking the time and joining us on the show today.
Appreciate it. This was a blast.
All right. Thanks.